how much expectation do you have that you'll be able to continue with this level of returns, given all the changes that are happening at BP?
Well, Anna, good morning, and Mark, good morning. Thanks for having me on. Another good quarter, I think, from BP. We're strengthening our balance sheet, net debt down the 7th quarter in a row now. We're growing distributions, as you said, over $4 billion of buybacks in 2021. We grew our dividend at 4% last year. We're growing returns. You may have seen our return on average capital employed over 13% in the release today. And at the same time, we're investing into the future. You ask about the outlook for distributions. I think, the company is very focused, Anna, on what we call performing while transforming. I sound a bit of a broken record, but we are performing and delivering for our shareholders today, while at the same time transforming the company for tomorrow. And that's what the results show. We've said that if at $60 oil, we believe that we have the capacity to raise the dividend by about 4% per annum. We've also said today that at around $60 oil, we have the capacity for about $4 billion per annum of share buybacks, distributing 60% of our excess cash flows to that, while we put 40% on the balance sheet. So clearly, if prices are higher, there are and is the opportunity for increased buybacks.
Good morning, Bernard. You said it's performing while transforming. You're obviously performing. The results show that. I want to focus a little bit on the transforming. You said you're going to invest 40% of capex by 2025 into growth businesses. Can I clarify, does gas count as a gas business? And either way, whether it does or not, how much of that figure will go into fossil fuels businesses, growth businesses, by 2025?
Thanks, Mark. Yes, it's one of the things that we announced this morning, and one of the things that's really exciting for us is that the transition presents enormous opportunities. And one of the things that we've said this morning is that we will increase our investment into those transition growth businesses to over 40% by the middle of the decade, 50% by 2030. To answer your question specifically, natural gas is not one of those businesses. Were we to include it, it would be much, much higher. But it is things like bioenergy, EV charging, hydrogen, renewables, our convenience business. And we're really increasingly confident, increasingly optimistic, I think, about the role that a company like ours has to play. If I can just take one example, take sustainable aviation fuel. We have enormous competitive advantage in that space because of our history. We've got 5 refineries, and we're going to build, or we've got several refineries, but we're going to do 5 major projects over the coming years to build sustainable aviation fuel plants at them. We have a trading organization which can source supply, and we just signed a deal you've seen recently with New Seed for a crop called Carinata, which we can convert into sustainable aviation fuel. And at the other end of the spectrum, we've got Air BP, which is present in every airport in the world. We supply every major airline in the world. So the question is, why wouldn't we take advantage of that position that has been built over decades, give society what it wants, which is lower carbon emission aviation fuel in this example, and, by the way, in the process, create enormous value for our shareholders. So we're very excited about this. We believe that there's a real role for a company like ours in the future to give society what it needs and give shareholders real value creation.
Bernard, we're also covering, of course, we cover the high price of gas relatively and the high price of oil at the moment. We cover the geopolitics that lies behind some of that. And I wanted to get your thoughts on that because you have a lot of exposure to Russia, given your 20% stake in Rosneft. It seems that at the moment, US sanctions on Russia have not impacted you. Is your involvement in Russia, that stake in Rosneft, is it in any way under discussion in the light of the tensions between Russia and the West here?
The first thing that I would say is that there's obviously no impact currently on our operations in Russia. If we step back, Russia is a large part of the global energy system. It's a member of OPEC Plus. As we know, it's a large supplier of energy to Europe. And BP, like many of our peers, have a presence in the country. We've been in Russia for over 30 years. And Our job, Anna, is to focus on the business of business. We avoid the politics that served us well in many countries around the world for many, many decades. That's what we're doing. And obviously, if and when there are sanctions, we will comply with whatever comes our way. But for now, there is no change. We're focused on the business at hand, and that's what we are doing and will continue to do.
Okay, so no concern about the geopolitics when it comes to your Rosneft stake. But given your net zero targets, are you concerned about the upcoming Vostok development in the Arctic that will involve a massive increase in hydrocarbon extraction? How do you feel about that and Rosneft's involvement in that?
Our strategy, Mark, is a three-part strategy. Part one is resilient hydrocarbons. Part two is our convenience and mobility business. Part three is our low carbon business. Within the first, resilient hydrocarbons, not a popular thing to say in some camps, but hydrocarbons will be needed for many decades to come to provide the world with the energy that it needs. We need to make sure those hydrocarbons are produced with the lowest possible emissions and at the lowest possible cost. That's what we define as a resilient hydrocarbon. The barrels of oil in Rosneft are entirely consistent with that. It may surprise you to know that the greenhouse gas intensity per barrel of a Rosneft barrel is lower than BP's. It's lower than many of the international oil companies. And they've just come out with a strategy where they have set a net zero ambition for Scope 1 and Scope 2 emissions by 2050. And it's not just about the future. They're taking action today. In 2019, they drove their fugitive emissions down by 73%. They're converting their own fleet of vehicles, of which there are many in such a vast country, to lower carbon sources. So this is a company that gets it. It's on a track to net zero. And one of the things I've learned in Russia is that when an agenda is clear, it gets done.
Okay. On another subject, Bernard, you're clearly doing very well as a business. The buybacks are a function of that. Profits soaring at BP. Are you concerned at all for some audiences that might not look great, that the sector and the business is maybe seen as a bit of a cash machine? Some politicians have in the past tried to raid the sector for windfall taxes. It's been talked about by the opposition in the UK, not by the government very much. I wonder how you feel that message will go across at a time when UK domestic energy bills are set to rise by 50% this year.
Well, it's a great question, Anna. Look, I think I understand the questions and the conversations around a windfall tax. I'll just say a couple of things, if I may. Number one, we obviously don't set the price of energy, and it's just 12 months ago on this channel we were reporting the largest loss that the company ever made in its history, $20 billion of loss because oil prices were so low. In fact, at one stage they were negative. So that's important, I think, to have that context. The second thing is in terms of a tax, what the UK probably needs is more natural gas, not less, and therefore we need more investment in that natural gas to help. And the third thing I would say is that we need to accelerate the transition in Britain. And one of the other things that we announced this morning, Anna, is that over this coming decade, for every £1 that we make in Britain, we will invest £2. We will reinvest £2, more than that actually, for every pound that we make. And the majority of that investment, the vast majority of it, will go into helping Britain transition to a net zero future. We're going to invest in offshore wind in Scotland, in the Irish Sea. We're going to invest in hydrogen at Teesside. We're going to build out further what is already the largest charging network in Britain, BP Pulse. We're going to help Aberdeen decarbonise its transportation using hydrogen. These are the things that a company like ours can do. This is what we're going to do. So that's where we're focused. How do we make sure that the energy transition accelerates? How do we make sure that the natural gas is supplied that the country needs? That's what we need to be doing, and that's what we're doing our best to do.
Bernard, I feel you're very, very ready for that question. An impressive answer. Look, despite your very, very impressive results, you had significantly lower returns from your trading division and oil trading division. What went wrong there? Was that just a one-off, or was there something else more material? And I guess kind of on the back of that, how do you see oil trading for the rest of this year?
Look, I think quarters come and go, so to speak. It actually was a good year for trading in 2021. We have a great organization. I'm very proud of them. As we look to the future, oil prices, It's always difficult to tell. I think we've learned early in our career that making predictions isn't always the smartest thing to do. But there is a lot of uncertainty, I think, today. We've got what's going to happen with Iran. We've got what's going to happen with the response, the shale response in North America. We've got concerns in Libya. We've got questions about demand. What happens if there's another variant? So a lot of uncertainty. But what I will say is that demand is strong. And you can easily see a further tightening market throughout this year. But more than anything, I think we should expect some volatility. And at the end of the day, we don't know what the price of oil is going to be. And that's why we're running our company to focus on a break even of around $40 so that we're resilient to a range of price outcomes. We don't control it, but we do control how we run our business. That's why we're taking out $2.5 billion of cost. That's why we're doubling down on convenience. Convenience sales up 20% over the last couple of years. So that's what we're focused on, Mark.